All right, and we're live. What's going on, Z community? It's your boy Azizz, and welcome to the final session of the live stock picking. Now again, be sure that you guys are following us on all of our platforms, includes Instagram, TikTok, Facebook, LinkedIn, you name it, we're there. On top of that, please give a chance to the actual podcast that we have going on, which is the Personal Finance in Canada show. Again, any of the platforms that you guys are listening to, whether that's Spotify, Apple Podcasts, Breaker, Overcast, we're also there. Be sure to check it out and let me know what you guys think. But without further ado, let's actually get in with this live session of stock picking. It's going to be a short one, so let me just kind of go through what we did last time. Where we last left off was calculating the average price to earnings ratio over the past 10 years. Now, you guys might have known from the last session that we had, I did this manually. And then after we got off, actually, I figured out that it was really easy. All I had to do was just copy and paste from macro trends onto the Excel sheet. And I didn't really delete this, but for your reference, boom, literally just copied and pasted all of the dates. I had the average calculated already from a little equation that I put onto the Excel sheet. Put all the stuff from the past 10 years in terms of past EPSs, past PDE ratios, and then from there I calculated an average. Now I'm going to delete this very briefly because we don't really need all of this excess space. I just wanted to show you guys that you actually could copy and paste it. So now that's deleted. After doing all of these analysis, we ended up finding that most of these actually did pretty well. The only thing that didn't do well was EBF. So that's one thing to kind of keep an eye out for. So what we're going to do right now is actually begin filtering these stocks and trying to aim to get up to 5 to 6 different stocks that I can now put into my long-term watch list. Now, how we're going to do this is we are going to count up the amounts of yeses that we have here, and we're going to tally them right all the way here. So as you can see, let me just kind of delete that because that's a little bit of a spoiler. They're numbers anyway, so you guys don't know anything what they meant. So we're good on that part. So check this out. Essentially, where you guys see the highlighted cell right now, whatever number I end up putting here, it ends up automatically calculating that as a percentage. What does this percentage mean? It takes all of the factors that we looked at. So from PDE less than 20 all the way down into here, up to Q, which is no shareholders holding more than 60% of shares. And then I end up dividing it by 16, which is the total amount of factors that we utilize. This is going to tell us basically how good it is for us to filter it down or to narrow down this entire list of stocks. So let's begin with Oracle, the usual. We're going to count how many yeses there are, as I just said. So for Oracle, there is 1, 2, 3, 4, 5, 6. So that means that there is 6 out of 16 factors. We're going to put that, and it turns out 37.5%. Not bad. Let's look into Verizon now. 1, 2, 3, 4, 5, 6. That's it. Just 6. So very similar to what Oracle was looking like. Kimberly-Clark, 1, 2, 3, 4, 5, 6. Another 6. Next up is Campbell Soup, 1, 2, 3, 4, 5. A little less. Clorox, 1, 2, 3, 4, 5, 6. 6. Awesome. Another 6 that we have in our hands. IMOS, 1, 2, 3, 4, 5, 6, 7. Ooh, not bad with IMOS. Next up MLI, 1, 2, 3, 4, 5, 6. Another 6. Not even surprised. I guess when it's a guy from Toronto doing this, everything's just going to pop up as a 6, eh? 6. I really bad that joke, but Hawkins, 1, 2, 3, 4, 5, 6, 7. Another 7 on our hands.
So as you guys can already tell, the 7s are going to look a lot more better than what the 6s are looking like, even though that there's a lot of them. So we're basically trying to aim for what's higher here. Now remember when we were doing the analysis on DIT the past couple of live sessions, there wasn't really enough data with DIT. So I don't really know if I'm going to count this with the analysis or just drop it off. Honestly, the way that I see things, it might be something that we have to drop off, because looking at the past data of price to earnings, along with dividend growths and things of that nature, especially for the earnings per share, these are really important factors. So I'm automatically going to take out DIT from the mix. If we don't have enough data, we can't really invest in it, right? So let's skip right into our GR. 1, 2, 3, 4, 5. 5. That's a low one. RGR is definitely not looking like a potential one we put down the funnel. 1, 2, 3, 4, 5, 6, 7. 7. Another 7. Things are looking pretty good here. And then DO. 1, 2, 3, 4, 5, 6. I'm really curious as to what's going to really prevail here. 1, 2, 3, 4, 5. Ooh, 5. Looks like EF is already catching the boot here. CRWS, 1, 2, 3, 4, 5, 6. That is 6 as well. DVD, 1, 2, 3, 4, 5, 6, 7. Okay. Solid. NPK, 1, 2, 3, 4, 5. Okay. And low. 1, 2, 3, 4, 5, 6, 7, 8. Ooh. Okay. Not bad. So now that we went through all of the different stocks that we had on the watch list, here's what's gonna happen, right? You guys probably don't even see me, which is literally the funniest thing in the world. Don't know why that's the thing. Let me. Yeah. Hopefully you guys should see me now. Sorry about that. So now as you guys can actually see on the spreadsheet over here, essentially we have to tally these up. We've got some 5s, we got some 6s, we got some 7s, and we got some 8s. So what we're going to do over here is for 8s, we're going to write loan. That is one ticker that we're going to keep 100%, no questions asked. And then for the 7s, what we're going to see here, going down from up, we have IMOS, Hawkins, what else? Hawkins, MEI, and DVD. So that actually already gives us 5 different stocks. Now here's the thing, because once we actually go down to the 6s, you guys really noticed that there was a lot of 6s going over here. So 1, 2, 3, 4, 5, 6, 7. There's about 7 different stocks that fit under the 6th section. Or 6, whatever you want to call it, but I'm pretty sure you guys know exactly what I mean. So what I'm going to do in the meantime, I'm going to actually put down these stocks as well, because these are things that we might have to actually look into a bit deeper, just to make sure that we're not missing out on any opportunities here. We had Clorox, what else? MLI, MNDO, CRWS. What else? That was it, right? 1 CRWS, MNDO, MLI, Clorox, Kimberly-Clark, Verizon, and Oracle. Right. So these are the 6 that we have that had 6 of the factors that were an A-OK type of thing. So I'm going to tell you guys straight up, as of right now, these companies definitely going into the watch list. But what we're doing right over here is we're going to try to filter out only one stock out of this list of 7 different companies. After we get this one filtered out company, we're going to add it into our watch list of 6, and then that's pretty much it for the live session. So what I'm going to actually reveal to you guys right now is the additional decision criteria that I have when it comes down to situations like these. I'm just going to duplicate a tab over here, put it over here so that I can also see what's going on in terms of the spreadsheet. And then I'm going to open up the decision criteria that I actually have. So I have individual stocks. I also have for ETFs as well. I'm just waiting for the spreadsheet to load up on my end. Just give me a quick second.
Okay, there we go.
So as you guys can see over here with my fundamental analysis decision criteria, the first thing that you can actually see over here is having a large market cap. What is market cap? Market cap is another fancy way of saying market capitalization, which is just basically, to put it in simple terms, because I don't want to go too deep into it, it's essentially how much value the actual stocks, or like the stock, how much value essentially the stocks have. So what we're going to do over here, when I say large market cap, these are market capitalizations with $2 billion or more. So what we're going to do is that we're going to take all of those stocks that we saw that fit under the list of 6, and then we're going to see whether or not these qualify as large market caps or not. So let's open up Google. For market cap, these are very, very basic things that you could pull off through Google, and I'll show you exactly how I do it. First thing that we had is Oracle. Also another tip, if you guys didn't know this, if you're on Google and you want to find information about a certain stock, you just put a dollar sign in the beginning at the search box, and then you type in whatever the ticker symbol is. So if I did dollar sign ORCL, first thing that's going to pop up to me is all of the data on Oracle. So as you guys can see over here, market cap is at a whopping $234 billion, meaning in our books, Oracle is a go. We're going to highlight that with a lighter shade of green, so that we know that Oracle has actually fit this test. I can already guarantee you guys Verizon is also on the same boat because it's a very established company. As you can see, boom, market cap also at around that 230 mark. So we're gonna boom. Next up is Kimberly-Clark, KMB was it? Kimberly-Clark probably on the same boat. Yeah, 45 million. So it's pretty good. CLX probably on the exact same
market cap range,
or just anything over $2 billion. Am I right? Yeah, $2 billion. Boom. Last but not least, MLI. MLI.
Oh, okay.
See, for companies that are kind of low-key, they kind of won't show. So what I'm going to do right now is see
what Yahoo Finance would tell me over here. Okay, we're gonna have to dig deep into it, or just open Yahoo Finance essentially.
Market cap is at 2.73, so just over that large market cap
criteria that we're looking for.
Next up is MNDO. MNDO.
Market cap is
$60 million. Not something that we're looking at, so guess what, guys? We're gonna delete it right off the list. CRWS is next. And Yahoo Finance it is. That's cool too.
Bang.
My guess is also we're gonna probably delete it off because
market cap probably isn't much.
Oh, okay, not bad. $42 billion. That's something we can work with here.
So let's put that up here. Bang. All right.
So now that all of these stocks have fit the decision criteria of having a market capitalization or more, then we're gonna move on to the next factor. I see your question. How's it going, AS? No idea who you are, but AS, essentially you're asking, just got here, what is important about market cap? So I'll kind of go over it very surface level in terms of market capitalization. Essentially, this is telling you how much value the entire stocks, like all of the stocks that are out there available to the public, it tells you how much value these stocks have. The reason why this is a very important thing is it has to do with something called liquidity. Meaning, I want to put this in the most simple terms possible, right? Dude, okay. Let's just say that you got a pizza and you could cut it up in as many slices as you want. The more slices that you cut up on this pizza, the less of the pizza is going to go away. So for example, if I cut this up into 4 slices of this pizza, and I give you 1 slice of that pizza, there's a huge chunk of that pizza missing. And essentially when it comes down to stocks, the lower the market capitalization is, If one specific financial institution which has access to millions, if not billions of dollars, decides to say, you know what, we're going to sell this, there's going to be a huge dent within the stock price, making it go all the way down in price. This puts everybody that is a common shareholder, such as yourself and myself, in a big risk. Versus, for example, when a market cap is over $2 billion, you're cutting this pizza up into like hundreds of pieces. So if a company or a financial institution ended up saying, no, you know what, we're going to pull out, us as common shareholders or retail investors, as they like to call it, we're not really going to face that much harm. I honestly hope that cleared things up for you. If you still want more clarification, let me know in the comments, and I can try to break it down a little bit more. Thanks for the question, by the way. Really appreciate it. Now, back to what I was saying in terms of the second factor that we're going to be looking at. This passes the market cap test. So now looking over here, we could see PDE. PDE, we've already done most of it. The current PDE ratio is under 20. The average is below 20 over the past 12 months, and then below 25 average over the past 10 years. Where is it in comparison with its competitors? This is not really something that we'll look into because it's not really in-depth. We're not comparing a bunch of different stocks. So not really going to look into that right now, but I will highlight it just as an indicator that it is something we haven't looked at yet. Dividend growth over the past, dividend growth of more than 10 to 20 years, we've already looked at that. Consistent average revenue growth over the past 10 years, I'm pretty sure we've looked at that as well. Let me just double check. Revenue. We did not look at that. Oh, we did. Yeah. Consistent revenue growth over the last 10 years. So we've already looked at that. Let's try to see what else we got. EPS, we've already looked at the average 10-year growth. Comparison of the 7 to 10-year EPS average, and then comparing that to the 3 EPS averages. As you guys can probably tell, this will take a pretty long while. So again, we're going to highlight this and try to go to something that's a little more simple. No sharp increases or decreases. We've looked at that. Growth over the past 4 quarters. Also looked at that. Current ratio, yes. Price to book, less than 25, yep, and yep. So selling for less than okay. I'm trying to see which one we could kind of look into next. Let's see. I think this one might be a good one in terms of this factor over here. 7% of the company's net profits are going to R&D, plus or minus 2%, depending on the sector that the company is in. R&D, in case you guys don't know, stands for research and development. Regardless of what sector this company that you're looking at is in, research and development is always such a crucial thing. Because by doing this research and development, they've got teams of like scientists or analysts or whatever the case may be, and they basically do research for the company to find out, okay, we have this specific product, how are we going to make it better? How are we going to enhance this so that at the end of the day, the end consumer is more happy with our product and they keep buying from us. So I honestly think that this is a really good one that we can look at, actually. So 7% of net profits go into R&D. So looking at this factor, we're going to have to know two things. First of all, how much it's spent on R&D and how much net profits it has actually made. So in order for us to do this, we're going to look at it like this. We're going to make a chart, as always. Big shout out to the spreadsheets over here. And we're going to type in R&D spend. Or no, we're going to do it over here so it's simple for us to see. Let me know if you guys can actually see it or not. If you guys can't, just let me know, and then we can try to sort that out. R&D spend, and then after that, net profits. So we're going to make this a little bit simpler. Let's pull up macro trends, our best friend macro trends. And then Oracle, start off with that one, because why not? I should have just clicked gross profits right away. Or sorry, net income, EPS, shares outstanding, revenue and profits. Revenue and profits might be a good one to look at. Gross profits, let's check that out and see what kind of information it gives us there. Okay. Want to see net income then. because we were talking about net income, weren't we? Net profits. That's different from gross profits, which is why I don't want to look at that. I feel like net income might be more of a consistent thing we can look at because it's telling you the net income after expenses and whatnot. So let's see what we have over here. And we weren't looking for anything else here, right? Yeah, no historical, just looking at the most current, I guess. Year over year.
Let's see if it'll give us anything for a yearly.
Nah, just looks like it's a quarterly thing, I guess. No, here we go. Annual net income. For 2020, the annual net income was...
Nice. This is what I
have to deal with, guys. slow computer. 10,135. So what I'm going to do to make this a lot more simpler for us is I am going to just go through all of the stocks first and get their profits, or sorry, their net incomes, and then from there we could actually calculate what the research and development percentages look like
in comparison to that.
Let's see what we got. 17,801.
17,801. Kimberly Clark
is up next.
KMB. Bang.
I'm really curious to see which one of these actually ends up turning up. 2352.
2352. Next up is Clorox. Clorox in the cut. And also
guys, the reason why I'm going through so much trouble to actually do this is because the more options that you kind of have in terms of stocks that you can kind of alternate between, I think the better. Obviously, my maximum is going to always be 6 stocks. I'm never going to have anything more than that within my watch list. But the reason I do that is something, it has to do with the certain strategy that I actually use. Got certain strategy you might ask, it's called the wheeling strategy. Really has to do with options. And essentially what this wheeling strategy is like, you're basically, you just keep buying, it's like day trading almost, but it's not day trading. Honestly, I have videos on this, but essentially what I do is I do a mixture of both covered calls and covered puts. Essentially, covered calls, if anything bad happens, or in terms of whatever, however you want to see it, with a covered call, people can buy those shares off of me. In that type of situation, when people buy these shares off of me, then I do a covered put. When I do a covered put, then it allows me to buy those shares back. Obviously, there's a lot more to it. I'm pretty sure that there's a lot of videos out there from the channel that you can watch where I explain what covered calls are and what covered puts are. But again, if you want me to kind of touch up on it in terms of how it looks like and what this wheeling strategy looks like overall, just give me a shout. I'm more than happy to touch up on it very surfacely, or touch up on it on the surface.
$7. Wow. Yikes.
CRWS is more of a logistics company. Now, keeping this in mind, you have to ask yourself, does a logistics company really need to be putting its money into research and development? Obviously, just by looking at its net profits, we can't really say much, but it is something to keep in mind now that we're about to pull up the research and development stuff.
Assets and liabilities might be in here. Let's see.
Dude, I don't even have ad block turned on. Come on. Who's man's? Alright, let's see what we got here. I'm not trying to look at no charts. GG, I'm trying to look at some data. Let's see. Cash on hand, definitely not there. It might be somewhere in the liabilities. Nothing. We gotta look in the financial statements. Then it's definitely the case scenario. So let's pull up the financial statements. And honestly, rather than keeping, rather than having to go back and forth in terms of between the watch list and that, I'm updating it on my other screen, and then after that we'll look at it together and then break it down from there. Okay. Definitely not in the income statement. It would have to be in the cash flow statement. Let's check that out and see. Is it here?
Research and development. If you guys catch it and I completely passed by it, let me know. Not here. Could be in the balance sheet then. My bad, guys. Like, I'm kind of rusty. I haven't really slept much, even though you guys can tell from the energy that it's there. It's just when it comes down to seeing this stuff, that's not there. Should be here, actually. Don't know why I don't see it. Interesting.
Give me a second. Because
usually pulling this up is pretty simple and straightforward,
but I think it's because we're looking at CRWS. Do you guys see it
on my trip? No.
No. Okay. Let's
look at it again. If it's not there, I'm just gonna move on to the next company. To be honest, if anything, we'll just take CRWS. There we go.
Research and development.
As you guys can see, it's that fourth row in this chart. And as you guys can see, over its past, I think ever, it just hasn't been spending anything on research and development. Again, I think it's because it's a logistics company, so there isn't really any need for that. But again, I personally think that there's a need. At the end of the day, if you're dealing with logistics, it's something that's a must. You gotta look for efficient ways in order to do shipping or things of that nature. And if you come up with a breakthrough, then you know what? Like, it could end up meaning a lot for the company. Yikes! I don't know why that closed. I was trying to update the watch list over here on my end. Okay. Nice to know. So guys, because of that, because we're not seeing any R&D investment from this company, from CRWS, we're gonna have to take it out of the list.
Sorry,
not sorry.
Right, can you delete, please? You don't have to.
MLI.
I feel like
this might really be the make or break, because we'll actually get to see percentages and realistically speaking, because of the different
sectors and stuff.
What? MLI isn't investing anything within research and development either. Weird. Clorox. There's gotta be something for Clorox, right?
That is so weird to me. I'll be completely
honest with you, I don't even know what MLI completely does, so I can't really give a say on that. But so I don't really know what's up with that. Okay, there we go.
Sorry. Boom.
145, not $145, guys, $145 million.
So we're
gonna put that over here, 145
mil.
So yeah, I want you guys to keep that in mind too, like when we're writing these little 3-digit, 4-digit numbers, it might not look like a lot, but you have to multiply this by 100,
or by $1 million, sorry. Awesome, so that gives us that. What's the next
company?
KMB.
Kimberly-Clark.
I'm curious to see what
their research and development look like
here.
Nothing. Absolutely nothing for Kimberly-Clark. That's obviously going to take it right out of the space for us.
You can hate
me all you want, but at the end of the day, you got to do what you got to do. So I'm sorry to Kimberly.
We are out of this thing.
Verizon is up next.
Verizon has to have some sort of research and development,
telecom, and of course it doesn't. It's going to obviously be wrong. Not a really good thing for Verizon. And next up we have Oracle.
See, my gut feeling is telling me that it's going to be there,
but I feel like it's not. You know those feelings.
We're just going to have to wait and see. That moment of suspense is really the killer here.
And boom, there we go.
Some research and development expenses. $6,067. $6,067. And
I don't know why it was there.
There we go.
So let's actually do the math on this.
Let's bring this up over here so that it's easy to calculate.
what we're gonna do, we're gonna take what the research and development is, and then we're going to divide it by the net profits. So it might be confusing, so kind of follow with me as to where I'm putting these boxes over here. Boom. Oracle. Ooh.
Put this in percentages so it's easier for you guys to take in.
And then
Clorox. Yikes. Ooh, okay. This is very interesting to see. As we can see over here,
7% of its net profits are going to research and development, plus or minus 2%. As you guys can see with the calculations that we actually just did over here. For Oracle, these guys essentially spend almost 60% of their
total profits, their total income,
and then put it into research and development.
Which makes sense
knowing what Oracle does, but again, the average, industry average among all different types of industries are about 7%, plus or minus 2. And as you guys can see with Clorox, it's about 15.44%. For me personally, this doesn't really qualify. It's not really something that looks attractive to me. And the reason I say that is because research and development is a big part of the business's growth, the business success.
Don't get me wrong.
But again, there are also other expenses that a company needs to worry about. In this situation over here, if we're looking at Oracle, who's spending basically 60% of their income on research and development, where's the other 40% going? And how are you guys splitting that 40% up where it's such an efficient process where it's like, okay, yeah, we have to take care of this, we have to take care of that. 60% is just not sustainable whatsoever. Now you could make the argument for Clorox having a 15% of its income to research and development. But again, we do have to take these things into consideration where, yeah, okay, cool, like, it's a much lower than what Oracle had, but again, you need to make sure that the company itself knows how to allocate its capital smart and efficiently. So I'm going to break it to you guys, none of either Oracle or Clorox are going to go into our watch list. Boom. What does this mean? This means that our watch list has already been narrowed down. As you can see, we've got Loan, IMOS, Hawkins, MEI, DVD. These are 5 of the new stocks that I'm going to be putting into my watch list for the long term. I'm obviously going to do a lot more in-depth analysis, and I'll be honest with you, it's really unnecessary for a lot of people to actually go in depth for this. But I'm going to do it for my own due diligence just to make sure that at the end of the day, I know where my money's going and I'm doing research on these companies inside out, knowing what's going on. Yeah, that's pretty much it. ZCommunity, if you guys did have any questions, feel free to let me know. Obviously, if you're not going to get the chance to say it in the live stream, let me know in the comments below, or reach out to me on your cellular device. I'm on Instagram mostly 24/7, so shoot me a DM at Azizz.finance. That's pretty much it. And again, guys, make sure you're checking out that podcast. We're dropping episodes every single Tuesday, right at 5 p.m. So be sure to search that up. Personal Finance in Canada show with your boy, Azizz. All right, ZCommunity, this is your boy, Azizz, signing out. Peace.